Welcome to Investors Guide. It's been an extremely exciting week for every Indian, and we're going to try and answer as many of your questions as we can. If you have more questions about the big changes that we're seeing in our money this week, write to us. Email ID is at the bottom of your screen. You can also call us. I'll put a phone line at the bottom of your screen as well. My team will answer those phone calls for you. Over the next half hour, we'll discuss Dhirendra Modi's black money crackdown and how it impacts you as a retail investor. In our product review, we'll take a look at the Birla Sun Life Small and Mid-Cap Fund, and we'll tell you whether it makes sense to pay off your home loan or invest the money in mutual funds instead. Let me bring in Dhirendra Kumar. Dhirendra, thank you so much for joining us. And I want to appreciate the fact that you've made time for retail investors right through this week, because it's been a sort of nervous and confusing week for most investors. We've seen the big black money crackdown, that announcement that came in saying that 500 and 1,000 rupee notes, were no longer valid. And the announcement came about 4 hours before the deadline. So I think the element of surprise was part of the entire plan. It's been talked about and established that it is obviously a bold and a strong move, completely going at black money at the very source. But I want to understand from you in terms of just the process and easing it out, because there's a second Saturday holiday, then there's a Sunday, then we understand that Monday will also be a bank holiday. So there's several days where retail investors and normal consumers are having to go without cash at all. That kind of inconvenience, do you think it could have been better handled, or is there advice that you would like to give someone who's watching at home right now?
Yes, it causes great inconvenience. And I don't think, there is any way around it. It has caused inconvenience, and I don't think it could have been reduced at all. Of course, the government could have planned the timing in a manner that without these holidays falling in thereafter. And they can still reduce the pain by, asking banks to open and have the groundwork, or, having sufficient cash. The Reserve Bank has come out with a guideline in terms of the kind of form that you have to fill for cash exchange, and if it is your money, legitimate money, which you withdrew over time and it is lying with you, which you can explain where it came from, there is a possibility that you'll be asked question. There is also a possibility that below a threshold it will not be possible for the government to question each and every money getting deposited in the bank, and so it could have been handled a little better. But I don't think it's a difficult thing. It was completely unexpected. I think, if this would not have happened, most people would have thought that will tell you that it is an impossible thing to do till it actually happened. So I don't see a reason why one can say that, it could have been done any better, except that little bit of timing issue.
Well, Dhirendra, let's also talk about the fact that the market reacted quite negatively in the morning after that announcement. But we have to also accept the fact that there was the big surprise that came in from the U.S. presidential elections that the market was reacting to as well. FIIs were reacting to that as well. So it wasn't purely in reaction to the black money move that the market came down like it did. The Sensex lost 1,000 points that morning. I want you to help us understand what impact will this have over the long term on the Indian economy and the Indian market and our mutual fund holdings.
It will have a short-term impact, and if you have chosen good funds, I don't think you have much to worry. Yes, these are very noisy times, and I don't think this is going to be the end of it. 2017 is going to be a period when we will see a reversal. The U.S. the interest rates in U.S. will start inching up. Every time you'll have a surprise. So far, they have done nothing about it. There is a great deal of uncertainty, and markets generally dislike any uncertainty. So that's why we are seeing this behavior. If you see the kind of ups and downs within the day, with the results, with the changing complexion, I don't think there is as much of a big negative. And looking at this, the big crackdown on black money in India is a huge positive, is a huge long-term positive, because yes, there will be a lot of small businesses, a lot of entrepreneurs who will be in trouble. There are we know that there was a parallel economy. We know that we had a huge amount of, a big parallel economy where there is a lending process, there were borrowers, there were lenders, and it was a grease system, and that will be disrupted. But at the same time, I feel that organized businesses who can handle the scale, who can handle legitimate operations, will have a huge upside. And this is where I feel that banks will suddenly become prosperous. We will see interest rate coming down. Actually, when I'm thinking harder about the possibilities, real estate will crumble. The reason why there was an arbitrage, that if I paid taxes, I had 70 rupee. And if somebody did not pay taxes, he had 100 rupee. Now once is 100 rupee, and your real estate investment was your currency. And you were able to exchange it at will, do the transaction at will, so that you were never at a disadvantage. Now once you realize that your 100 rupee worth of real estate is worth 50 rupee and is not equal to the 70 rupee, you will have regret. Then you will start legitimizing your businesses.
Well, Dhirendra, obviously, one of the positives that has been discussed is the fact that a lot of money that was unofficially circulating in the system will now become official, will now be moved into the banking sector, and that should give the RBI the comfort to bring down interest rates. Do you believe interest rates will come down because of this move?
Oh, definitely. We are a dominantly cash economy. In fact, I have come across a lot of instances during the week where the homemakers, they have stored the money in cash over time, and now they will be forced to put that money into the banks. Likewise, for most other, a lot of people have legitimate income, money withdrawn, and we believe in cash. We actually, it's a legal tender for all the goods and services that you want to avail. So a lot of that money will get back to the bank. Banks will be flush with funds. The cost of money will actually come down. And I visualize a very accelerated, rate cuts or a decline in rates over time. That is going to definitely hurt the retirees, the people in retirement who derive their income by way of interest. This definitely will benefit businesses. Equity investors have something to really cheer about, because organized businesses will benefit. A lot of businesses will benefit from the marginalization of the relatively smaller, unsophisticated or less compliant players. Yes, some sectors, will be definitely hurt, real estate in particular, and ancillaries to that, we have seen that, cement and the whole pipeline. That has been helpful, but that will actually be derailed. And I think, it will definitely hurt a lot of poor people who will be barely managing on their day-to-day earnings, making a living based on their daily earnings. They will be stressed. Their small savings, which will be lying with them, will be worthless, or they will have to spend time which will be worth more of hard labor to get their money exchanged for it to be legitimate. So that is the kind of pain which which is undesirable pain, and that I think the government should have thought of some other novel ways. I don't have a great idea there, but I was just thinking that how it could have been. Somebody should have thought a little harder about easing that. Up to 4,000 rupee, what has been planned so far, that may not be enough, and that may not be very easy, and that may not be easily accessible across the country.
Well, Dhirendra, also a very quick question for you. We saw gold prices really go up the night that this announcement was made. A lot of people were attempting to make last-minute cash transactions for gold. What impact do you think it will have on the price of gold now that the deadline is passed, and now that the black money can no longer be used to buy gold? What impact will it have on the precious metal prices in India?
I don't know. I've been mostly wrong, but I still believe that, I actually am generally guided by the principles of what drives something over a long period of time. And that is the reason why I'm very optimistic about equities in general, because businesses will grow and prosper and benefit from all the things that we have seen so far, generally speaking. And likewise, the legitimization of everything, and what we have seen ever since this government came, we have seen the launch of the sovereign bond, gold bonds, which is a far superior way of owning gold, which actually reduces the demand for gold, or actually does not reduce the supply of gold. Likewise, if we are seeing a crackdown on the corrupt and the black money, then gold is a safe haven, definitely. It will be a repository of value. It will benefit out of it. In fact, this is think of a situation that today if somebody had gold as compared to cash, he will be better off. And that is the reason why people believe in gold. But I think, the kind of surprise that we have got with this, this demonetization announcement with a surprise, I think people with, gold acquired without, attributable sources, they have reason to worry.
All right, and remember, if you have any particular questions about the money that you have at home or the process of getting that money changed, feel free to get in touch with us. Our email ID is at the bottom of your screen. The message is very simple. There's no need to panic. If you're an honest tax-paying citizen, it's a well thought out plan. There will be methods for you to change your money if there's money at home, irrespective of how much it is, provided you can show that it's legitimate, white money. You can change your money right up till March next year. So there's absolutely no reason to panic. The banking system will come back up again, and you will be very quickly be able to exchange that money and go on with life as normal. In the meantime, try and move as many of your payments online as possible. My other word of advice is, if you have people who who help you at home, someone who works as a maid or a driver, help them out. This is going to be a difficult period for them, like Dhirendra was pointing out. Help them fill the forms, change the money. Any advice that you can give them, I'm sure, will be a huge help at a time like this, because you will be able to navigate the banking system a lot better than they can at this point. Let's quickly take a look at the question that we're looking at this week. This week we have an NRI with one dependent who'd like to plan for his children's future and his own retirement. Gaurav has written in Dhirendra. He lives in the Middle East, and he has some very interesting goals. He wants to save 3 crore rupees for a home he wants to build in 10 years, 3 crore rupees for his children's future in 20 years, and 6 crore for his own retirement in 26 years. Now, he has 1.25 crore rupees in an NRE deposit, and he can put aside 2 lakh rupees on a monthly basis for the short term and 1.25 for the long term. He's already investing in mutual funds at 40,000 rupees a month. We're going to go through the list. It's a fairly long list of funds, but before we get into his funds, given the goals that he has, and he's saving a fair amount of money, would you want to tweak the method in which he's approaching his savings at all, or do you think he's on track?
I'll be quite worried about having this large, almost most of his financial net worth is in the the NRE account, which is yielding 7%, which is decent. But I really wonder that this is a great, this sizable an allocation is justified. Maybe he should have half of this money, or maybe a quarter of this money, into fixed income, unless he has some tangible goal where, in a defined time frame. Any money, the kind of money which he likes, he might need in next 5 years, maybe that should be his deposit. Of course, the return is also reasonable today, but it will be entirely taxable. So he should work towards that, methodically reducing his fixed income allocation, which is this deposit. He can potentially save 2 lakh rupees a month, and he should get started. Get started with one of our relatively conservative plan for half his money, and maybe a very aggressive plan for rest of his money. Aggressive growth portfolio and growth portfolio that will actually add up to about 6-7 funds. That will do the job. And even if he decides to reduce his deposit, then this money should be spread over 2 to 3 years period, depending on because this is 1.25 crore. And assuming that he plans to invest, 60 lakh rupees out of this, then this money should be spread over 2-3 years, because that is the kind of money which, that is almost like 3 years savings, what he'll be doing, his contribution. So it should be spread over that longer period to eliminate the possibility of catching a market high, at the same time being able to effectively average it. And it's a sizable amount. So ensuring that, you don't get a psychological blow if you are faced with a market downturn. And last week has been a reminder that, you can have a great faith in the equity market, but one big blow and you start wondering, it actually questions your belief. But I don't think there is any reason to get disheartened. But it's very different. It is easier said. Once you invest your money and see it decline in value soon after you invest, it's devastating. So it's very important the way you conduct, or the way you start investing, and the way you do it is the only mechanism which will help you stay on course. Well,
Dhirendra, let's take a look at the funds that he's already investing in, because we've given him the list that you recommend. But he has the UTI Equity Fund, the UTI MNC, the DSP BlackRock MicroCap, SBI Blue Chip, iProve Value Discovery. I'm not really sure about the MNC fund and why he's holding on to it, but it seems like good funds that he's currently investing in. Would you like him to hold on to this portfolio, or should he be switching entirely to the portfolio that you recommended to him?
Yes, this is a collection of good funds. But I would say that our growth portfolio, or stable growth portfolio, and the aggressive growth portfolio are differently constructed, and given his investment time frame and his goals. One goal is 25 is 30 years away. The other goal, the earliest goal is 15 years away. So he will be little better off. At the same time, the sizable money which has to, if he has to reduce his deposit, allocation to deposit into these market-linked investment, then he should approach it little more methodically. Our portfolios will be little better off, and he has built a portfolio of good funds, but that may not necessarily be a great portfolio, because we are going to see a time of upheaval where the low maintenance, a conservative approach, and a well-constructed portfolio might have a role to play.
All right, so that's the advice you're getting right now. I'm going to give you a quick recap before we go into break. Remember that currently our economy is going through a transition, and with every change comes a certain amount of adjustment and a certain amount of discomfort, which is what we're experiencing right now as far as cash in hand is concerned. If you need any help, feel free to get in touch with us. But really, from a long-term point of view as an investor, you have very little to worry about if you are a law-abiding, tax-paying citizen. We're going to take a quick break. We'll come back on the other side and we'll talk about the Birla Sun Life Small and Mid-Cap Fund. Don't go anywhere. Welcome back. You're watching Investors Guide. Thank you so much for staying with us. It's time for our product review, and this week we're looking at the Birla Sun Life Small and Mid Cap Fund. Avan will give you those numbers, and then we'll come back and talk about it.
Thanks, Faye. This week we take a look at a small cap fund, the Birla Sun Life Small and Mid Cap. With just 2 stars on value research and 381 crores as assets under management, this fund has been an average performer in the long term. Let's quickly take a look at its performance over the short term. The red line is the fund and the blue line its benchmark. You'll see that the fund has performed marginally better than its benchmark since the year 2013. However, it hasn't managed to outperform its category. In the year 2014, though, the fund's performance was better than its benchmark with a return of 66%. You'll see that the category's return was about 81%. The fund managed, however, to outperform its benchmark and the category in the year 2015 with a return of 13%. You'll also see that the fund's performance in the last 1 year has been particularly good with a return of 26%. It doesn't stack up quite well over the long term, though. So is this fund worth holding on to, or are there superior funds to invest in? Let's find out. With that, it's back to you, Faye.
All right, Avan, thank you for those numbers. The small and mid cap is down to 2 stars and a very small AUM, and it forms, that part of our market, of the mutual fund market, that's normally called the long tail, which is there are a lot of these funds with a small AUM at this point who are not great performers. Would you recommend that investors sort of avoid these funds altogether? Should I write off any fund that is below 3 stars or that's below a certain level of AUM?
No, that may not be the good yardstick. Of course, below a certain rating grade for a sustained period of time should definitely be a warning signal. And on that count, this fund actually looks not so great. On the performance front, a lot of people are very pleased with even very low-rated, poorly performing mid-cap funds simply because their absolute returns are fantastic. They have done very well by holding these small and mid-cap funds, and nobody bothers about the risk or the volatility or relative performance if in absolute terms you are pleased with it. So generally speaking, even this fund, which is relatively below average, but there is nothing to be disappointed with this if you have held it for 2-3 years. But looking at the portfolio, it looks like a reasonable fund. Off late, it has done very well. But looking at it over the last 4, 5, 6 years, we have simply superior options. It definitely has never been on our radar. It has never been among the top of the pack, and and it has been also relatively more volatile in its own category. So despite its good performance, it is not a finest choice among this.
It's not the finest choice. And Dhirendra, for the few investors who might have already invested in this fund, if you recommend switching out, should they be switching maybe to one of the small cap funds that we recommended on the show for this year? Or do you think that maybe there's a better category to consider altogether right now?
No, one is that if somebody has consciously chosen to allocate a certain part of his money to small cap and he understands the reason, at this point I believe that if you buy or if you continue to invest in small caps, you will have to think of 5 to 7 years time frame for it to really beat all other categories. Small caps will always deliver you great returns, but you must think of that time frame. Most investors have been attracted to this category simply because they were looking at the recent past and they were investing their money, but that is past, that has been earned. And you have to see that how the fund does in future. And the fact that they have done very well, the fact that these companies have become very expensive, they also look very expensive on the valuation front. I'm not very hopeful that they will be able to sustain, or most funds will be able to sustain the performance. Also, the kind of turbulent phase of the market that we are getting into, there will be a great deal of uncertainty. There will be a great deal of global noise which we will see in coming times, and that will cause great upheavals in the market. And this is the time when these funds will crumble. So the kind of on the day when last week we faced this big decline, some of these funds were one of the worst hit. So most investors who have come in the last 1.5 years, they haven't seen that phase. You have to be prepared for that. You have just seen the return. Now risk will visit you in this category. Are you ready for it? If you are not, you have accidentally been in this category, you should definitely move out of these funds. Shift your money to something which is, so that you are able to diversify better.
All right, so be very clear about the fact that if you're picking a small cap fund, you have to be very, very sure that you're ready for the volatility, and the volatility hits this category before any other part of the market. Dhirendra, what's your rating of the Birla Sun Life Small and Mid Cap Fund for Investors Guide viewers?
Just as on our risk-adjusted scale, which is a 2-star fund, it's a below average on the return and with on the risk and with a fairly average return.
2 stars there for this fund on Investors Guide. If there's a fund in your portfolio and you'd like us to review it, get in touch on the email ID that's at the bottom of your screen. Let's move on to our buy a home question. Mohan Gulati has written in. He says he has a home loan and a car loan, and he wants to know, since he has some cash in hand right now, should he knock off the car loan first because he'll have to pay it off with a penalty, or should he pay off the home loan? The third option, he says, is to invest it in mutual funds, considering he's getting tax benefits on the home loan. So there is that, tax benefits on the home loans is always something to hold on to. So, Dhirendra, the car loan will be far more expensive, and it does make sense to pay it off. But does it make sense to pay it off with a penalty?
I think he should just go about understanding in detail what is the penalty and how big is that penalty, what it translates into return. But anyway, you'll start saving on the interest outflow. So just figure it out. I think that is it should be your priority to ensure that, even if you have to, and look at it in absolute term. What is the interest that you will incur for the money that you already have? And if you are able to get it with a fixed penalty, that should be all right. I think, home loan is something which it's the only kind of loan which investor can carry on. Because if you are able to do a parallel investment equivalent to your EMI, you will be or the lump sum that you might have which can prepay your home loan. It's always good to over such long period of time, 15-year, 20-year term, SIPs will produce more return than the cost that you will incur on a home loan. So economically, it makes sense. The other thing is that in coming times, if you are there with a variable interest, variable loan, coming days, make sure that it is getting realigned with the declining interest rate, which I visualize will happen much faster than we anticipated.
And you can write to us if you have any more questions. Dhirendra, thank you so much, as always, for spending time with us on Investors Guide. We hope, of course, that the changes that we're seeing in our economy right now in terms of cash and spending will move stronger and will make us a stronger economy in the future. We'll be here to hold your hand right through that entire process. Thank you for watching.